You've done the hard part. You've saved $100,000. That alone puts you ahead of most people. But now comes the part that actually determines your future. What you do with it. Do you put it in something safe and steady? Or shoot for something bigger, riskier, and potentially far more rewarding? Today, we're putting two heavyweight ETFs head-to-head, IVV and SCHD. One gives you a slice of America's biggest companies. The other pays you real cash through dividends that grow year after year. Both are powerful, but they couldn't be more different in how they build your wealth. In this video, I'm going to walk you through the details, compare performance, dive into the strategy, and help you decide which ETF could make your $100,000 go further. And by the end, I'll show you a side-by-side projection over 30 years, including which one could cross $3 million in value and which one could pay you $30,000 a month in dividends. But first, what are these ETFs, really? Let's start with IVV, the iShares Core S&P 500 ETF. Its job is simple: track the 500 largest public companies in the U.S. economy. That means you own a piece of Apple, Microsoft, Nvidia, Amazon, Meta, and hundreds more. It's broad, diversified, and essentially a bet on America's long-term growth. IVV doesn't chase trends. It mirrors the market. That makes it boring to some, but brilliant for anyone playing the long game. Think of it as an escalator, slow, but always moving up, as long as the U.S. economy keeps growing. Now let's look at SCHD. Schwab's U.S. Dividend Equity ETF launched in 2011 and takes a different approach. It zooms in on about 100 companies with strong financials and a proven history of paying and increasing dividends. These aren't just big companies. They're consistent, profitable, and generous. Inside SCHD you'll find names like Coca-Cola, Chevron, Verizon, and Altria. Less tech-heavy, more stable. It's built to pay you and keep paying you, regardless of market chaos. So what's the real difference? IVV gives you tech and innovation-fueled growth. SCHD gives you durable, recession-resistant cash flow. And when you dig into their sector makeup, the contrast is clear. IVV is 30% tech. SCHD is built around consumer goods, energy, and industrials. But that's just structure. What happens when things get tough? So far, 2025 hasn't been easy. Rising rates, inflation, and trade tensions have hit both ETFs. IVV is down 6.7%. SCHD is down 5.89%. But the reasons are different. Tech is sensitive to interest rates, which hurts IVV more. SCHD took hits in energy and consumer staples. Zoom out, and IVV has delivered 93.46% in the last 5 years. Over 10 years? A massive 158.92%. SCHD has also done well, 55.79% over 5 years and 92.54% over 10 years. Not as explosive but steadier. Fewer spikes. Fewer stomach drops. But here's the kicker: dividends. IVV yields about 1.26%. SCHD pays closer to 3%. That may not sound like a huge difference, but when dividends are growing year after year, and reinvested, the compounding effect is powerful. Let's run a real-world test. You invest $100,000 today. No more money added. Just sit back and let time do its thing. IVV grows at 9.97% annually, dividends at 1.26%, growing 6.95% a year. SCHD grows at 6.78%, but its 3% dividend grows at 11.3% a year. After 10 years, IVV, $285,784 SCHD, $270,645 after 20 years. IVV, $795,582 SCHD, $880,351 after 30 years. IVV, $2.17 million SCHD, $3.79 million. That's right. SCHD wins. And here's the mind blower. IVV pays about $10,180 per year in dividends after 30 years. SCHD pays $348,177 per year. That's nearly $30,000 a month. So what's the takeaway? If you want explosive growth and don't need income now, IVV is a beast. But if you like the idea of stable income, rising cash flow, and long-term wealth, SCHD might be your better bet. It comes down to your goals. Are you chasing big numbers on a screen? Or building a financial engine that pays you month after month? If you're still unsure, we break down a $100,000 investment into a balanced portfolio in this next video, showing how you can combine both growth and income to reach $10 million. Click here to watch that now. And if this video helped you understand ETFs better, hit that like button. Subscribe if you want more breakdowns like this. Thanks for watching, and remember, money only works if you make it work for you.